the view of the Telecom Commission. Gauri with you on top of that story on ET now. Let's also talk about some other stocks that are in focus today, and that's LIC Housing as well. The company expects to maintain margins at about 2.5 to 2.7% in the coming quarters, and management says the company will reduce rates on loans as and when RBI cuts interest rates. Listen in.
Two things I will say about the NIM. One is that our outlook has been that we will be somewhere between 2.5 and 2.7. That we are likely to reach there at the end of the financial year, because not only we are addressing the developers loan portfolio now. Once we have put the systems in place, we are also looking at reducing the borrowing cost. We have been very transparent. Our company, whenever the RBI will cut the rate, we will transparently pass it on to the customers. Even if RBI does not cut the interest rate, and if our borrowing cost comes down, we will transparently pass it on to the customers.
And on to some earnings calls. Arup Roy Chaudhary, CMD at NTPC, we chatted with him earlier in the day, and he says that the company is well funded for now and is not considering any fundraising plans in the future.
We are not in need of any fresh equity. We have tied up our money. In fact, we have almost 16,000 crores undrawn money. We are waiting for these coal issues to get resolved so that we draw this money. The Government of India, there is a cabinet note which has been moved for divesting 9.5%. If the cabinet considers that and approves it, I think then the Disinvestment Ministry will take necessary action for divestment. Historically, there is a tender which we floated, and $2 plus was quoted by the Reliance people. It has not fructified. We have gone to court against them, and the matter is still sub-judice. We are fighting the case.
Okay, from stocks and news to macros, then Finance Minister P. Chidambaram today met some top foreign investors in the capital. The meeting that was sought by FIIs, broad contours of economic revival, were discussed in that meeting. Mrinalini Krishna joins us with more details on what actually transpired at that meeting. Mrinalini, which were the FIIs present in the meeting, and what was the key points of discussion?
Finance Minister said it was essentially the FIIs who sought for this meeting with the Finance Ministry. They want an update on the Indian economy, the direction it is headed, and the steps that the government has undertaken to revive growth. Steps like fiscal consolidation measures, what are the impact? And the Finance Minister said that he explained what the government intends to do, what were the measures that they have taken so far, and what is going to be the impact on the Indian economy. Some of the key participants include global players like Goldman Sachs, UBS, BlackRock, T. Rowe Price, as well as Amansa Capital. And remember, this is not the first time the finance ministers met these FIIs. It was on October 6th in Mumbai, not very long back. The key agenda clearly is to build confidence with these global players to attract long-term foreign capital into the country, to address their concerns. Remember, they had concerns on high fiscal deficit, taxation issues like retrospective taxation, as well as GAR. And though work has already begun on that, the finance ministers laid out a fiscal consolidation roadmap. Shown panel reports are already with him. A decision is likely very, very soon. So clearly all those issues being addressed, essentially a confidence building exercise with global investors.
Okay, Mrinalini, we'll leave it at that. Meantime, in the first meeting ever with the newly reconstituted Council of Ministers, Prime Minister Manmohan Singh outlined his government's agenda, highlighting concerns about fiscal deficit as well. Supriya Srine joins us now with more details on that mega meet. Supriya, what is the broad message that the Prime Minister wants to deliver to his new team?
The message in plain and simple: nothing should come in the way of investments, nothing should come in the way of the Prime Minister and the Finance Minister's attempt at wooing foreign and domestic investors. I mean, look at the kind of stuff that he has told his newly constituted Council of Ministers. He has said that there are broad concerns that remain in infrastructure that need to be sorted out. He's also admitted that the government at one level is working against the political calendar. And this is quoting straight from the Prime Minister's opening remarks. He says the government is working against the political calendar, admitting that perhaps the party wants more populist measures, but the government is squarely focused on getting the economy back on track, on pushing reforms, on perhaps getting a more brutal fiscal consolidation plan in place. And with the larger message really is that if you actually look at the cabinet reshuffle, he's got a whole lot of people in key positions who understand new economics, who understand modern business dynamics, people like Jyotiraditya Scindia, people like a Sachin Pilot, made in charge of key portfolios that are very crucial to investor sentiment. And I guess the broad message from the reshuffle and from the first meeting today is nothing should come in the way of boosting investor confidence, nothing should come in the way and mar sentiment or confidence anymore.
Okay, that's the Prime Minister's message to his new Council of Ministers. We'll keep it with economy. Thanks for that chat, Supriya. Let's take it across then to see Rangarajan, Chairman of the Prime Minister's Economic Advisory Council, who in an investor conference in Mumbai re-emphasized the need for pushing through key reforms. He says the latest reforms push is reminiscent of the 1991 reforms and shall help to create a more competitive environment. Listen in.
Inflation remains high. The fiscal and current account deficits also remain high. We need to tackle all these problems if we have to achieve a high growth and then too in a sustained way. We should also not underestimate the changes that have occurred in the Indian economy in the last 2 decades. Nor should we overlook while assessing India's performance currently. Nor should we overlook the impact of the international financial crisis and the slow growth of the advanced economies.
Okay, time for a short break here in Markets at Lunch. When we come back, we'll get you more stock trading ideas from our top technical experts, CK Narayan, Ashwini Gujral and Mitesh Thakkar join us with their top trading calls for the day.
And we'll also get your live street view with Sharmila Joshi of sharmilajoshi.com.
Here with Markets at Lunch right here on ET. Now, good time to get you midday trading ideas from our top technical experts. What's the lineup that we've got for you this afternoon? Ashwini Gujral, Mitesh Thakkar and CK Narayan, as always, with their top trading ideas. Ashwini, to you first. What are you spotting for trade this afternoon?
See, Godrej Industries, after a correction, is again a buy with a stop about 305, target of 321. Aurobindo Pharma is a buy with a stop about 167, target of 181. And Biocon is a buy with a stop about 267, target of 285.
Okay, let's also bring in Mitesh Thakkar of miteshthakkar.com, and he shares with us his strategies on Maruti as well as Divi's Labs.
A buy on Divi's Lab, I think that's a stock which we discussed in the morning as well. It's made a new high and clearly showing momentum on the upside. Can be bought with a stop below 1170 for a first target of 1250 on the upside. Maruti, of course, was also a stock which was discussed yesterday as well. Remains a buy with a price target of around 1500 and a stop just below 1408 is what I would recommend.
Okay, and CK Narayan also joins in with his midday trading ideas. CK, what are your calls for today?
I have two buys for the day and ahead. First of them is in Adani Enterprise. I think the stock has had a nice consolidation where it did not really yield any ground that it had built up in recent times, and today shows a nice upward thrust. Currently at about 220, 221 levels, I would recommend a buy here. Looking for a target in the zone of around 230 plus and keeping a stop loss on this of about 4 to 5 points from entry level. Second buy I have is on Marico, again a stock which has been building up pretty consistently. Fresh upside move to new highs, I think at about 213.14. It qualifies for a short-term investment. Keeping a stop at about 4 to 5 rupees from entry again here, and looking for a minimum target for immediate traders at 225, and for shorter-term investors maybe even higher targets.
CK, just want your call on the entire auto pack as well. While Tata Motors has seen a hefty surge, yesterday we saw great traction on Maruti as well. How are you mapping, and what is it that you like out of the auto basket?
I think if you look at them as a bunch, the clear standout stock from the whole group would be Mahindra Mahindra. There is no doubt that that is the one with the maximum amount of trend strength and momentum strength and volume participation and interest in the market. So I think if I have to look at the auto pack, Mahindra would be my first stop pick. And on the other side, if you go to it, Hero Honda has seen a very nice up move, but 1750 around is where the support is, but equally around 1900 plus, the stock does run into some heavy weather and there is certainly some amount of supply there. So I think that's between a range. So I would play Hero as a range type candidate. I think right sort of noises are being heard on Tata Motors, but I can't really shrug away a feeling that, you know, Tata Motors is more on a corrective advance rather than really sustained drive right now. So I would be a trader in, say, maybe Tata Motors. I would be definitely a buyer in Maruti, where the signals are very, very sound and very clear cut, and any dip in Maruti should be used to buy.
Okay, well, Wipro is the star when it comes to the frontline counter. So is Tata Motors. The one which is shining bright out of the mid-caps is definitely Titan. Ashwini, you had a fairly bullish call on Titan this morning. After an 8.5% surge, is there still headroom to go?
I would think so, particularly given that Diwali is around the corner, and chances are it should, cross 300, 310, 315 is the next target.
Okay, Ashwini and CK, thanks so much for joining us with those midday trading ideas as always on markets at lunch. Let's get your fundamental view on the market then. It's time for Street View at lunch, and joining us this afternoon is Sharmila Joshi with her call in the market and stocks that are in news. Afternoon, Sharmila. Good to have you with us on the show. Firstly, want to get a sense of how you've mapped the auto sales that have come in so far. Some of these auto stocks have been in news for the last few days as well. Tata Motors looking strong, M&M also looking very good. What would be your preferred pick in the auto pack?
Absolutely. I think, the last couple of days we've seen the kind of up move that Maruti, for instance, has shown. And I think there the numbers, of course, as expected have been good. I would say a little bit better than expected. Largely because I think that last year too at around this time there was some problem in Manesar, and this year we are actually seeing the company back on a recovery mode after dealing with fresh problems there. So I think given that, and I think more importantly given their new launches, possibly from the bunch Maruti looked the best, but I think a lot of the positive is now captured in the price. So I think maybe an upside maybe of another 4-5% immediately, and then maybe you will see the stock kind of stay in a range. The stock, as you were discussing earlier again, I think which I like is Mahindra and Mahindra. Apart from the numbers that we've seen, where we've seen that traction coming into the tractor play, which was always a concern for the company in these last couple of quarters. I think going ahead, the outlook for Mahindra and Mahindra stays strong. So once again, I think I would buy the stocks on dips because we have seen the stock run up post numbers. So I would wait for a bit and buy that, but that would really be my top pick within the play. Within the two-wheeler space, I don't really like anything too much at this, at the current price points. But as I said, I think perhaps Mahindra and Mahindra, Maruti and Tata Motors, that would be my order of looking at four-wheelers.
Sharmila, what about Wipro? How are you reading the demerger news? Obviously, the stock has rallied in the back of that announcement and ahead of earnings. How do you look at Wipro? Do you think there's more room for the stock to rally?
I think so, I think that I haven't read too many details on the demerger move, but I think that, they're doing it at a good time. And we are seeing the entire IT pack go through, some kind of a consolidation or like a sideways movement, really given, the kind of market outlook that most of them have, with the exception maybe of TCS, which continues to really go from strength to strength. So I think they're doing it at a good time, and Wipro has been the most ignored stock within the top 4 or 5 IT plays, as it were. So perhaps this kind of move and going ahead, how they really choose to take the company post the demerger move will could prove interesting for Wipro. So I think just given the fact that you're seeing this move and you're seeing it at a time when perhaps lot more can be captured in the stock price, especially for the IT part of the business. I think it's I think it would be a good move on their part.
Sharmila, Wipro is also slated to come out with its earnings tomorrow. After what we've seen from the entire IT pack, including some of the mid-caps like Hexaware, what's the expectation there?
I think, on the lines of what the other frontline companies have done, which would be really flattish, 4-5% kind of growth. Nothing really exciting. We again have seen this company, overcome some issues in the past where they too saw management changes, etc. And now, they seem to be recovering from that. So I wouldn't expect a disappointment. But as I said, for various reasons, it's not a stock that market really tracks too closely in terms of, like you don't really see I wouldn't expect to see the entire IT basket, for instance, move depending on how Wipro does. But as far as the results go, I would say in that flattish 4 to 5% kind of range.
Sharmila, just a word on the PSU banking lot as well, because a whole host of disappointment coming in by way of earnings, and then of course with the RBI's move as well. Would you stay away from the PSU banking lot, or are there still spaces to cherry pick?
We saw a very sharp correction the minute we saw that there was no interest rate cut as well as the provisioning announcement, as you were saying, and we've seen the stocks recover from there. Because you had seen stocks again really react to bad numbers, and you'd seen a correction there as well. But, I agree, going forward, perhaps it's going to be a sector that perhaps we won't track. It's not going to attract the kind of attention that it did in the run-up to this event, simply because people were positioning themselves for a rate cut which didn't come. And now we know that, December also you're not likely to see one. Possibly in the fourth quarter is what the indication now is. So I think given that, and the kind of numbers again that PSU banks have shown and the worries that stay, maybe you won't see too much of an upside from here, but there could be exceptions. For instance, I think Jammu and Kashmir Bank numbers were great. I think there you could see a re-rating and an outperformance from the overall pack coming from there. So there could be pockets like that. I thought Bank of Maharashtra was another very strong set of numbers. So there could be exceptions like that. But I think, yes, by and large, the focus would continue to be on private banking as a play. And overall, I think banking as a sector, would take a bit of a backseat in the next couple of months.
Sharmila, what's your call on telecom? There is an important meeting of the ministerial panel on spectrum refarming today. And, one gets the feeling that slowly but surely a lot of the regulatory overhang is being taken care of. At what stage would you advise investors to start getting back into telecom?
I would say wait for another quarter. But I think, if you're very long term and, you have that year plus kind of an outlook, then maybe you could start buying Bharti on dips. But other than that, I would really say it's best to wait it out for another quarter, get more clarity and then move.
Final word then, Sharmila, how have you read the earnings season overall? We've seen quite a few hits. Obviously, PSU banking has been a bit of a disappointment. IT has been good so far. Do you think there have been more hits than misses this quarter?
Not really, but yes, I would say that, numbers have been more or less in line with expectation. And as you said, the misses have come from the PSU banking space. But other than that, I think, when numbers are in line with what analysts and market is expecting, then I think it's really a good sign in that sense, because I think that, a lot of the negatives therefore are getting factored in, and, that we are now kind of settled in this range of dealing with, the current or the current scenario, whether it's interest rates, whether it is the difficulty, etc., etc. So I think that, therefore, maybe from quarter 4 onwards, we could start seeing improved numbers from some of the corporates. So that would be, this could be, one of the kind of the bottoming out kind of a quarter that we are seeing at the moment. So from that point of view, I think it's good. But in terms of hits and misses, I wouldn't really say there were too many hits, but fortunately there weren't too many misses either.
Okay, Sharmila, I'll let you go on that note. Appreciate you taking the time out and joining in.